Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome back to Investips. This is the second part of a two-part podcast discussing about foundation portfolio. From the first part, we have learned that strategic asset allocation is an important investment strategy to construct your foundation portfolio. Asset allocation is all about balancing between risk and return trade-off. In our opinions, effective asset allocation strategies are those that allow investors to maximize return potential without taking more risk than they are comfortable with. So how do we do that? First, you need to understand the characteristic of assets you would like to invest. Looking at past performance and how they perform historically can be one way to do that. Secondly, based on the combination of your risk tolerance and time horizon, you need to decide the mix of investment that can allow you to meet your investment goal. For this step, we believe that forward-looking perspectives are more important because they capture future market trends and important changes in the economy, and therefore they can provide you with a better indication of how future returns and risk can be for different asset classes. Let's take an example of a very simple portfolio of stocks and bonds to demonstrate how this works. Stocks historically are much riskier, but also offer higher return. Volatility in stock price makes investing in stock alone a very risky investment in the short term. However, if investors have a longer time horizon, they can be rewarded with strong positive return over the long term. But what is the future outlook for stocks? Now, our research showed that global equities continue to provide more superior expected returns compared to cash and bonds in the next 5 to 7 years. More importantly, if you have a big financial goal to meet and want to grow your wealth a little bit more aggressively, you might want to diversify the equity exposure toward regions outside the US, including emerging markets. Our studies show that over the next 5 to 7 years, non-US equities are likely to outperform US equity. Bonds are generally less volatile but offer a lower return profile. It means that if you are a bit more conservative and do not mind a lower return potential, you might want to have a higher bond allocation in your portfolio. But what is the forward-looking views on the bond markets? Well, our research showed that actually the future long-term performance of most bonds have improved. This should not come as a surprise given the recent changes in the global economy and potential changes in the central bank policy. That being said, the expected improvement is rather modest, meaning that you still have to accept the trade-off of lower return for holding more bonds in your portfolio. Now you can carry on this exercise for more asset classes until you achieve the asset allocation that suits your profile. The important thing is, once asset allocation has been decided, you need to have the discipline to stick with it. Of course, one can argue that your asset allocation should change because your financial priorities and goals change over time. We agree with that. So to strike the balance here, we believe that reviewing your strategic asset allocation once a year would make sense. So there you have it, basic concepts and simple process to construct a foundation portfolio. Now, the question for you here is, do you already have a foundation portfolio set up? If you do, is it the right one for you? In the subsequent episodes, we will continue to explore different aspects of a foundation portfolio such as diversification and how to incorporate other investment opportunities to boost the return potential. So do like and subscribe for more information. Thank you for listening in.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.